Good evening, everyone. Good evening, everyone. It give me
Considering the situation today, MTP has invited CS Shekhar Sane sir to guide us on various points to be considered while submitting income tax return. We look forward to gaining valuable insights that all enhance our efficiency and fluency in our professional work. So, thank you once again for your presence and support. Over to Ajay sir.
Thank you, Andre sir. Now I request our respected President, Advocate Narwade sir, to address the gathering.
Good evening, respected members present on the dais. The dignitaries present on the dais, respected seniors, dear colleague and friends. A very warm welcome to each one of you for joining us for today's second study circle meeting through online Zoom platform, our YouTube channel, and the member present here in the hall. As the tax practitioner, we know that our profession requires the constant learning. Tax laws, rules, and online utility form regularly changes. To serve a client well and protect their interest, we must stay updated with every single change. That's why our MTPS study circle meeting are so important. They gives us a common platform to meet, discuss real ground level problem and learn from one another. Today, we are focusing on income tax return filing for the assessment year 2026-27. The filing season is always a busy and demanding time of all of us, between matching the client's record, verifying AISTIS, and meeting very strict deadlines. A small mistake can lead to unnecessary notices for our clients. To help us to understand the key practical points and avoid common errors, we have with us our learned guest speaker, CA Shekhar Sane sir. He has the deep knowledge and rich practical experience in the direct taxes. We are very grateful to him for taking the time out of his busy schedule to share his knowledge with us today. I request all of you to stay attentive, ask your practical doubts freely during the question answer session, and take the full advantage of this today's second study circle, which is very much important. So with this, thank you very much, all of you, for giving me the opportunity. So please.
Thank you, sir, for your valuable guidance. Now, I request our senior managing committee member, Sokatme sir, to introduce today's esteemed faculty, CA Shekhar Sane sir. Sir, please.
Good evening to you all. Thank you to the association for giving me the opportunity to introduce today's speaker, CA Shekhar Sane. Basically, he is a commerce graduate in 1990, cost accountant 1991, chartered accountant in 1993, employed with Bharat Forge Limited 1994 to 1996, associate of BK Khare and Company 1996 to 2000. In full-time practice, audit, taxation, management consultancy since 1996, DISA of ICA 2006, GST certificate course 2017, empanelment on ICAI, peer review board, tax audit quality review board, past member, internal quality assurance cell, faculty, Symbiosis College of Commerce. He is a past faculty for Symbiosis College of Commerce, MIT Business School, Gokhale Institute of Economics, ICWAI, ICAI, MIT, Symbiosis Law School, Kirloskar Institute of Management, Maharashtra Bureau of Commerce, Defense Accounts Service, MITCOM. Delivered lectures on union budget at various colleges, management institutes, ACII, AICWA study circles. Delivered lectures on direct, indirect taxes, audit, accounting standards, etc. Bank branch audits. Lectures, peer reviews training program by ICAI Peer Review Board, Dhule, Sambhajinagar, Nashik, Satara, Sangli, Kolhapur, Pune, etc. Writing articles, Daily Sakal, ICAI, other contributions, SP College, Judge Students National Conference Study Circle, International Study Circle Tour, Pune branch of WIRC, delivered lectures at Cape Town, South Asia, Moscow, USSR. Artificial Intelligence, appointed as faculty by ICAI from May 25 for its members. So please welcome our today's chief guest, CA Shekhar Sane. Thank you.
Thank you, sir, for such a detailed and wonderful introduction of the today's faculty. Now we will felicitate our esteemed faculty as a token of our respect and appreciation by our president, sir. Thank you, sir. Now, without taking much time, I request CA Shekhar Sane sir to begin his session on the income tax return filing for AY 2026-27. Sir, please.
Good evening. First of all, I would like to thank MTP for providing me this opportunity because it has once again given me a chance to go through various complex provisions of income tax law. Since this particular lecture has been organized at the brink of the conclusion of business returns, which are without tax audit, I believe in case you feel it appropriate or otherwise, you can take hints from the session and also revise your return on or before 31st of December 2026. In case you have filed a return and wish to have the change, it is better always that you file the return on or before due date, because if at all you are filing the return on or before due date, then and then only you can change the regime. Otherwise, the changing the regime is not really possible. I believe you are very well aware of it. Without wasting much time, as it is 20 minutes are passed, out of which 10 minutes are passed because of me, because I did not come appropriately 10 minutes ahead of the time. I reached over here at 6:55 instead of 6:45. So sorry for the same. Without giving much trouble to you guys, let us start with the session on the most practical aspects in the era wherein we tax consultants or chartered accountants are treated as deemed servants of the government, and we are always at the mercy of our client, because our client always feels that compliance of law always is a responsibility of a tax consultant or a CA, and that too they are behaving or they are dealing with any transaction or transactions or set of transactions merely on the advice of a tax consultant or a CA, as the case may be. Therefore, I would like to start with a case wherein an interesting situation which has come in my returns filing era in this particular year, wherein one of the clients' daughter has approached me and told me that I had been advised by our consultants and I had searched on the Google and I also searched on the artificial intelligence tools that even a HAF can also render a professional service. And therefore, the first case is with reference to a case wherein an architect firm, which is supposed to be having the partners of the architecture qualifications, having the prerequisite degrees or the nomenclations, just like our chartered accountants or cost accountants or company secretaries, wherein we are members of that particular institute and we are going to be abiding with the code of ethics of that particular institute. So those architects are having their all limits set, and so as to ensure that they did not have further leeway in their tax management, so to say. Per se, in their intention, it was tax evasion. However, it was a tax management in their language. And therefore, that particular firm was having a partnership firm, having the husband and the wife and one more person as an architect, as a partner of that particular architect firm. And they failed that if at all they take the income in their individual name, rather than taking the income in the name of an architectural firm, then in that particular case, the income tax can be definitely organized, managed, or evaded, as the case may be. And therefore, what they did, they already had their HUFs, and one of the guys was not having his HUF, so he floated his HUF. Then after they float their HUF, they have applied for the GST department for voluntary registration. And thereafter, they have started rendering the professional service as an architect in the name of an HUF. Now, the persons who were availing that particular service from their particular angle, that particular entity was an entity which is an artificial legal entity as per the law. Secondly, they had the GST certificate in hand. Thirdly, HUF was ready for deduction of tax at source under section 194 ZB of the Income Tax Act. ZB means the professional section. And therefore, they felt that for them, giving the income to the individual and giving an income to the HUF does not really make any difference, because there is no per se change in the service quality, or therefore there is no change in the quality of the magnum or the quantum in which that particular service is going to be rendered. Therefore, those firms, various firms, availed the benefit of that particular HUF as an invoice, tax invoice. And accordingly, the expenditure book, TDS was deducted, the TDS got reflected in their HUF records after filing their ETDS returns and income. GST, obvious tax invoice, they reconciled their GST with the books, everything was matched. And ultimately, that particular case came to me for the discussion. And I therefore objected very strongly that whenever a particular case is decided under the magnet of a professional, in that particular case, whether the same particular case can really be discussed on the umbrella of a particular entity, which is the entity of the law of the land. And therefore, I have used Perplexity as one of the AI tools to ensure that as to whether a HUF can really render a professional service or not. My dear friends, as you are aware that AI results are always subjected to verification. However, I was very, very clear in my mindsets right from beginning that HUF per se cannot render any professional service, and that too more particularly when the professionals who are engaged in the HUF are the members of that particular entity, and they are already members of an entity which is a legally registered entity in India authorized to practice in architecture. Had the case been in the case of a doctor or the case of a chartered accountant or a case of a company secretary or the case of a cost accountant, the scenario would have been same, because that's an artificial legal entity bound by certain code of ethics or the principles of law. And therefore, I started searching on that particular entity. As you're knowing, there is a definite case law that HUF can be a partner in the partnership firm. However, that particular HUF cannot receive remuneration, as you are aware of that particular thing. And therefore, my first piece of advice to you is that even if there is GST registration, even if that particular entity is having the TDS certificates on their hand, even if their income is reported in 26 years, you should object to that particular entity's filing return, because per se, when you are filing that particular return of income, then you are nothing but abetting the crime of evading the income tax law by allowing a particular professional to render a service under the umbrella and wings of an HUF, wherein that particular service has per se been rendered as an individual per se, because that particular person is really trying to shift his responsibility as an architect in that particular firm to an HUF, wherein that particular HUF cannot become a member of an institute of architecture, so on and so forth. Not only that, that particular HUF cannot per se also have the liabilities and responsibilities of that particular architecture institute by which the particular profession is getting governed. Therefore, nowadays, what we are doing, we are per se doing, our article students or our staff members, they are basically gathering the information like 26As, ASTS, they're scrutinizing the bank statements, they're checking and ensuring that that particular income has really reflected in their bank statements, 26As, everything is matching, they're having their GST turnover, the GST invoices are also raised, the GST input tax credit eligible is also been availed, GST recovered after the due credit of input tax credit has already been availed. So why not to file that particular return? However, I would like to advise you that whenever any particular such case is in front of you, you should clearly explain the so-called HUF that they should amend they should ask their clients to amend their ETDS returns. They should change that particular PAN from HUF PAN to the PAN of the partnership firm, which has really rendered the service of an architect. Because the legal position as an HUF, they cannot per se render the professional service. Secondly, a professional income and a personal income is required to be distinguished based on various decisions of the Supreme Court, courts of India, etc., etc. Thirdly, HUF per se in the capacity as an karta also cannot render a professional service as an architect, so to say. Thirdly, the resulting doctrine that is inseparably linking of the personal qualification licenses, fiduciary duties and the personal skills vis-a-vis that particular entity giving the professional service or rendering the professional service is not really possible. Thirdly, even if their contention that they are registered under the GST law, or thirdly, the fact that the income is reported under 26A, according to me, has got per se no meaning. And therefore, whenever you are filing the return of a HUF, please ensure that the TDS is not deducted under section 194J of the Income Tax Act. You can have TDS deducted under section 194H of the Income Tax Act, or A of the Income Tax Act, or I of the Income Tax Act. However, whenever you are finding that particular TDS is getting deducted under the 194J section, you should have the definite question mark in front of you. Secondly, as regards the practical position, the nature of activity is also very much important, and therefore you need to also understand as to whether a particular HUF is really carrying on or can really carrying on an activity as a professional, and what is the tax treatment of that particular thing. Therefore, HUF in law or in regulatory practice, be in the professional chartered accountant, advocate, doctor, or architect, as the case may be, per se cannot render a service of a professional. And therefore, by this particular definition, or by this particular analogy, or by these particular principles, you should definitely deny to file that particular return of income and ask that particular client to amend the ETDS returns, amend their contracts, and to make sure that the return, whichever is taxed in the hands of an HUF, may be required to be taxed in the hands of the real individuals in the ultimate scrutiny, in case that particular return is open for the scrutiny and selected for the scrutiny, because it will become extremely difficult for you people to prove that HUF has rendered a professional service, or HUF can render a professional service, or HUF has parted with the architectural professions or chartered accountancy professionals code of ethics, and accordingly that return itself will become totally null and void. And therefore, the provisions of section 148, reopening of the assessment, section 147 read with 148, celebrated love letter under section 271(1)(c), that is concealment of income or furnishing inaccurate particulars of income, wherein income includes loss. All such provisions or all such hanging swords may fall upon in this particular area. And therefore, I would like to invite your attention to the fact that merely because there is a 26A, there is GST return, there is entries getting reflected in the bank statements, etc., cannot be the sole tests even for presumptive taxation of the income. And therefore, I thought that I should make you guys aware of this particular situation in the right perspective of the fallout of this particular aspect. And therefore, I believe that this particular case study is per se a case study wherein the eye-opening is really in the hands of the particular person rather than the income which is getting generated, or income the hands in which it is getting generated. I believe you are aware of this particular case study, and therefore let me proceed to my next case study. My next case study is with reference to the factors on the basis of which the agriculture income and the taxability of the transfer of the agricultural land is required to be decided. Now, for that particular purpose, what I did, I have decided that I will have the gathering of various case studies based on the documents like Sarifa Bibi or the recent judgment of the Honorable Mumbai High Court in the case of Ashok Thakkar, and also in the case of the celebrated decision of Pune Tribunal in the case of Abhishek Gaikwad and company. And therefore, in this particular case, I wish to really explain you first as to what is really meant by agricultural land and what is really meant by agriculture income. The first and foremost crucial tests which should come to your mind before filing a return, that whether a particular land is an agriculture land within the meaning of section 2 clause 14 clause subclause 3 of the Income Tax Act, wherein various parameters of an agricultural land have been defined by the government in the income tax law itself. Secondly, the most important section which should come to our attention is section 10 into bracket 37 of the Income Tax Act, wherein they have specified the population criteria or the distance criteria. Thirdly, we need to understand the definition of an agricultural income under the law, because per se agricultural land and agricultural income has been defined under the law. However, carrying out of agricultural operations such as Nangarni, Perni, Ugavni, Biya Perene, or and whatnot are not per se defined under the law. Secondly, the marketing of the agricultural activities, the realization of the produce, digging of the well, expenses on the digging of the well, watering of the plants, so on and so forth. All such agricultural operations, so forth, so on and so forth, are not per se defined under the law. And therefore, that has per se resulted into the decision of the Honorable Supreme Court in the case of Sarifa Bibi, wherein various core issues are being addressed by the Supreme Court. First of all, the very first core issue, either you are handling the agriculture income case or you are handling the agricultural capital asset, which is a land, which is the transfer case, or whether you are handling a matter under Section 54B of the Income Tax Act, wherein an assessee is trying to seek exemption under Section 54B of the Income Tax Act, wherein an agricultural land is transferred and the agricultural land is acquired. And therefore, all these sections, that is Section 214 into bracket 3, Section 1037, Section 54B, agriculture income sections, all these sections are required to be understood and studied by you before filing a return of the income. And therefore, if at all you are really having a balance sheet, or if at all you are really having a state of affair of any particular entity by which you are filing that particular return of income, my first and foremost advice to you is that you must link, please mark my words, please link the assets of the particular entity or an individual or HFR and whatnot, and then try to correlate those assets with the income streams. For example, if at all a particular person is having agricultural land, you must try to check and ensure as to whether agricultural income is really offered to tax on a consistent and regular basis on the basis of Section 145 of the Income Tax Act. I will borrow the wordings of the Section 145, that is method of accounting, wherein the income tax returns or the books of accounts are required to be followed based on the principles of consistency and accrual. And therefore, whenever you are trying to link a particular assess's return with respect to the asset and the income linking, you will observe that the agricultural income reporting, either it is missing or per se agricultural operations itself are not carried out, or whether the agricultural operations are carried out and the agricultural activities are in losses, or whether the agricultural activities are carried out but per se they are not reported in the tax return of the income. Thirdly, you should also check as to whether a particular agricultural land is having the linkage with the ownership with reference to the share of the particular individual. For that, you may go through the patta or the patti or the 7/12 extract and whatnot. And therefore, why I'm trying to tell you these things, these are the first crucial tests for determining as to particular income is really an agricultural income or not. Secondly, whether a particular land is really agricultural land or not. And thirdly, whether that particular land, whether it is agricultural land or otherwise, whenever that particular land is transferred, whether that particular land is really an agricultural land. And now, with the definition of Abhijit, with the ratio of Abhijit Gaikwad, in the case of Pune Income Tax Tribunal, you can also record, you are and also read with the Ashok Thakkar decision in the Mumbai High Court, you are required to distinguish between the rural agricultural land and an urban agricultural land. So to say, last but not the least, the location and the distance and the population tests, and last but not the least, the type of the agricultural land. So Jiraiti, Bagaiti, Korodavahu, with well, without well, all these facts are required to be considered. Their share, whether the agricultural operations are performed, whether the agricultural operations are supposed to be backed up by the appropriate evidences, such as buying of seeds, performing of an agricultural operation by payment of labor, then explaining as to how the plants are watered, as to how the produce is getting generated, and as to how the produce is getting marketed, and lastly as to how the produce is getting sold, and whether those particular receipts are really credited in the books of account. If not, whether that particular income is per se generated by cash mechanism or by bearer check mechanism and not. These are the crucial tests. Thirdly, the agricultural land type. Fourth, whether the adjoining properties are supposed to be getting taxed with the agricultural taxes. Thirdly, whether the agriculture income is consistently and adequately reported in the income tax returns. Last but not the least, what is the share of the SSC and whether per se he is really carrying out the agricultural operations or not, because agricultural operations are per se being used by the various parties for converting, so to say, their black money into white money, or so to say, converting their white money into black money as well. And therefore, your attention must be up to ensure that the principles of Sarifa Bibi, Muhammad Ibrahim, in the case of Supreme Court, that is which is decided on 14th of September 1993, exactly 30 years back. Now, in the case of Ashok Thakkar versus National Faceless Assessment Center, the Mumbai High Court has focused on the fact as to whether a particular agricultural land is an agricultural land need not even face the music of the location and population. They have stated that if the agricultural land is compliant with the population and the agricultural operations and the municipality related locational areas, then that particular land can be treated as an agricultural land. However, recently, Pune ITAT has given the landmark decision in case of the decision of yes. So in case of Abhishek Gaikwad, the following factors are being decided by the Pune ITAT. Number one, whether actual and ordinary agricultural use at the time of generation of an agricultural operations have been performed or not. Number one. Number two, the location of the land and the municipality. Thirdly, surrounding land use and its zoning. Next, intention of the SSC regarding use of that particular land for agriculture purposes. Then intention of the purchaser and post-sale use. Now, this is something we really don't see while filing the return of income. Whenever an agricultural land is transferred, we always see to it that whether it is really an agricultural land or not. However, if the intention is to get that particular agricultural land converted into a non-agricultural land, in our common parlance, ene करून घेतली, in that particular aspect, then immediately the deal is being struck, and accordingly, that on the basis of the adjoining lands or on the basis of the locality, that particular land is getting converted to any land. In that particular case, kindly note that even if your return of income right now is accepted by the Income Tax Department and refund is generated under section 143(1)(a), that does not mean that your return is accepted on the 100% basis, because the notice issuance period for scrutiny is getting expired on or before 31st of July 27 or 31st of July 27, as 31st of August 27, as the case may be. And therefore, based on the information gathered by the Income Tax Department, whatever agricultural land that you are treating as an agricultural land may not be an agricultural land in its respect, and therefore your question can get scrutinized. Very, very importantly, another aspect you must figure out is that whether the evidence of an agriculture operations is really with the SSC or not. Next is the price and the commercial potential. What is the price and the commercial potential which the particular agricultural land is having at the time of sale is also a crucial factor which is considered by Pune Income Tax Appellate Tribunal. Next is the long-term past history of the use. As you are aware, my dear friends, under section 54B of the Income Tax Act, it is always important that the agricultural operations either must be performed by the SSC himself, or the agricultural operations must be performed by the parents of the SSC at least 2 years prior to transfer of that particular agricultural land. And therefore, the fact that whenever you are seeking exemption under section 54B of the Income Tax Act, or whenever you are explaining to the income tax authorities, or whenever you are of the opinion that it is not even required to disclose the sale of an agricultural land under the exempt income because it's a capital receipt. Nowadays, the Income Tax Department has given a window that there is an concept of other receipts or other income kind of a say. Therefore, many people are disclosing even the capital receipts under the head of income, although it is per se not an income. Why? Whenever an agricultural land is transferred, it is not an income, it is capital receipt. Whenever a gift is being received, it is nothing but an income, but it is a capital receipt. Still, I will advise you that if you really feel that it's an agricultural land, then it is always better to disclose under the head other income, even if it is in the nature of capital receipt. Lastly, as you are aware that no TDS is required to be deducted for transfer of land. And thirdly, the TDS deduction is also not applicable if the consideration is well below 50 lakhs. Still, I'll advise you as to check as to whether a particular land is really agricultural land or not, based on the parameters such as location, population, history of the land, adjoining areas, agriculture Shetara assessment or not. Fourthly, whether the agricultural operations are performed, whether agricultural operations are performed based on the consistent or regular basis. Fifthly, whether the agricultural operations are carried out by himself or the parents. Seventh, whether the agricultural income is reported by the assessee consistently or regularly in the return of income. Seventh and last but not the least, after that particular sale, what was the really intention of the seller, or what was really the intention of the buyer, and what is the adjoining area under which type of category that particular land is being situated. These all principles are becoming absolutely crucial while determining a particular case, and therefore I wish that you please go through the ratio of Supreme Court in the case of Sarifa Bibi. You please go through the ratio of Honorable Mumbai High Court in the case of Ashish Thakkar, and you please go through the ratio of Abhijit Gaikwad in the case of Pune IIT Tribunal. I will share all my material to MTPA, and therefore all these handouts will be available to you. Right now, I did not prepare PPT per se because of the pressure on time, because of the filing of returns deadline is getting ahead. Therefore, I thought that I will share these particular case studies in a piecemeal way so that you can also better go through it. Therefore, don't file the returns merely on the basis of 26S, deduction of TDS on land or non-applicability of TDS on the land, whether the particular land document is registered by the Mamledar in the Mamledar Kachari. While registering the transfer document, don't rely on these evidences, because these evidences are not at all considered by the Supreme Court as well as the High Court as well as the ITAT. The evidences which are considered by the courts under the income tax law are the evidences which we are discussing so far before this particular case study is being concluded by me. And therefore, whenever you are filing a return of income, whenever you are having the agricultural income, also try to ask the assessee what is his really intention to hold the land, whether he is intending to sell the land, or whether he is intending to perform the agricultural operations via contract agriculturist, whether the value of that particular land is below 50 lakhs or above 50 lakhs. Fourthly, what is the adjoining areas lands they are doing, whether that particular land is having a well or not, what is the type of land, Korodoro land, Bagaiti land, Jiraiti land, whether it is per se supported by 7/12 extract and a patti, and whatever is the type of rotation of the crop which is being available, and as to how the crop is being grown, as to how the crop is being marketed, and as to how the crop is being sold. In our auditing standards, SA 230 is the auditing standard for documentation. And therefore, all chartered accountants will definitely know that the audit documentation or the documentation is very, very important from the point of view of filing of the return. Therefore, whenever you are filing the return of income, please try to prepare basis of filing of the return of income. Take signature of the SSC and then proceed to file the return of income. Don't merely file the return of income by considering only 5,000 rupees as an agricultural income or 15,000 rupees as an agricultural income. Because please note that after 2 years or 4 years, whenever that particular agricultural land, if it is transferred or sold, these particular facts can be reopened by the tax department and they can revisit those particular documents. And if they are not supported by the evidences, then you will make your own case weak. And the client will obviously curse us as to why they did not tell us at the right moment of time. So this is my second case study. I now go back to the important case study, which is the case study of residential status. Friends, if at all you are observing that I am trying to take the case studies which are irrespective of 26AS or reconciliation of books under 26AS, reporting of income vis-a-vis the books of account, because all these areas now we are experts. Our article students or staff is also making these particular things very, very properly. We can import 26AS in the software. We can reconcile the entries with AS and TS. And therefore, I have tried to select the cases which should give you more thoughts, or they are more thought provoking, to ensure that the return file is not merely a technical return, but it is really a return of a substance rather than merely a form. And therefore, the tests of the substance are required to be followed by you rather than the test of only form. And therefore, while performing the test of substance, you are required to touch upon the things which are not per se driven by any software, or that is not really driven by the thought process of the 11th hour return filing by you, by only going through the 26AS statement or bank statement, etc., or relying merely on the basis of the information and explanation which is given to you by the SSE. And therefore, please make sure that whenever such agricultural income is being reported, or it is wherever it is a case of the agricultural land being transferred, you are required to revisit the parameters of these cases. Make a detailed speaking note in your office with reference to Sarifa Bibi case, Ashok Thakkar case, and Abhijit Gaikwad case of Pune IIT. Make a checklist and ensure that your decision is supported by the evidences. Take the signature of the SSE and then only file the return of income. Now, my next case study is very, very interesting case study. Per se, in our typical language, it is just a kind of a goal made by Lionel Messi of Argentina in the matches of Argentina versus Egypt, or Argentina versus England, or Argentina versus Switzerland, wherein those countries were under the impression that Argentina has really lost the match. However, in that particular case, they have realized per se after the match that the match was won by Argentina by virtue of merely their negligence, or by virtue of their understanding or taking the things granted, or by not really going through the law of the land in a clarity way, and by underestimating a particular provision of income, wherein we chartered accountants or tax consultants really ignore that particular position of the land. Therefore, that particular case study is with reference to a simple residential status case. In this particular case, which is once again been faced by me in this particular assessment year, and which was per se googly, and somehow with the grace of God, I could understand that particular googly and played it very well. Otherwise, there would have been an havoc. Why? We'll understand. There is a case wherein a particular person's travel history is being given over here. In the year 2021, he was here in the year India for 365 days. Obviously, prior to 10 years, that means till 1990 or till 2000, that is 10 years, SSE was obviously in India. He was, if at all, he was not in India. Those were only till 10 days or 30 days. So the history is that from the year 1990 till the year 29 to 20, he was definitely a resident of India in every respect. In the year 2021 also, he was in India for 365 days. In the year 21-22, that particular person was out of India for 224 days. In other words, that particular person was a non-resident Indian. Why? Let us understand the basic conditions and the additional conditions of the residential status, and that too with an amendment in section 6 by insertion of a clause 1A under section 6 of the Income Tax Act. Understand that the SSE has left the country for the first time in the year 21-22, wherein he was out of India for 274 days in the year 21-22. So what is the first condition? The first condition is the basic condition. The SSE must be in India for a period of more than 182 days. Second condition is that SSE must be in India for 60 days and SSE must be in India for 365 days over a period of past 4 preceding previous years. These are the two basic conditions. Now, what is the catch? The catch is that the word 60 days are supposed to be replaced by 182 days if that particular person leaves India for the purpose of employment or as a member of a crew of an Indian ship. Please note this fact very, very well. As a member of a crew of an Indian ship, and he is leaving India for the first time for the purpose of employment. Now, another catch is that when Section 6 was amended by inserting a clause 1 capital A, it was inserted like this, that whenever that particular person is visiting India, that at that particular point of time, instead of word 60, the word should be used as 120, provided that that particular assesses income other than the foreign income, if at all it does not exceed 15 lakhs, that particular person shall always become a resident of India. So, by virtue of Section 6(1)(a), in case the assessee is in India for say 125 days, and if at all his Indian income is more than 15 lakhs, excluding the foreign income, then that particular person shall be deemed to be a resident of India. Now, why I'm saying and why I gave an example of Lionel Messi and why I gave an example of Lionel Messi, Argentina in the matches of Switzerland, Egypt, or even Cape Verde, as well as the match against England. Please note that if the words 60 are to be replaced by 182, if that particular person is leaving India for employment. So, if at all you are under the impression that the first clause of 60 days is to be replaced by 182 days wrongly, without calculation of the number of days presence in India, you would have treated that particular person as NRI. Because that particular person is not satisfying condition A, but that particular person is satisfying condition B also. And therefore, you would have definitely said that that particular person is definitely a case of non-resident. Why? Because the question of compliance of additional conditions, that is whether that particular person is a resident of India in 1 year out of last 10 years, or whether that particular person is in India for 729 days over a period of 7 years, really are not required to be tested. So in this particular case, if you observe that in the year 21-22, he left India for the first time. In the year 2 also, that particular person was here out of India. In the year 23-24 also, that particular person was not in India. And in the year 24-25 also, that particular person was not in India. Why? Because he has left India for the first time in the year 21-22 for employment, wherein Section 6 is required to be read as the word 60 are to be replaced by words 182, because that particular person has left India for the first time in the year 21-22. So 21-22, 22-23, 23-24, 24-25, these 4 years, that particular person was definitely a non-resident of India. In the year 25-26, that particular person was in India for 125 days and his income was more than 15 lakhs other than the income of foreign resources. Now, let us understand this particular case by taking a practical example further, that particular person's name is say XYZ. He is an individual. He is employed in Infosys. That particular person is earning 60 lakhs salary in Germany, and that particular person is earning 16 lakhs rupees as salary income from other sources in India. All that particular income is reported in India. Infosys has given him the Form 16 by adding the Indian income plus income of the Germany, plus they have reported relief under the India-Germany treaty, and therefore, please don't file the return of income and as by treating that particular person as non-resident, because of the fact that Section 6(1)(a) will be coming into the picture. Since that particular person is in India for 125 days, even if he is not here for 182 days, that particular 60 words are being replaced by the words of 125, and therefore 120, sorry, and that particular person is in India for 125 days. That particular person's income other than the foreign income has exceeded 15 lakhs, and obviously since that particular person is complying both the additional conditions, that is he was in resident of India for more than 1 year over last 10 years. Also that particular person was in India for more than 729 days. That particular person will become a resident of India, and therefore you are required to claim the relief by filing Form 10F under the income tax law, and you cannot file Form 67 because Form 67 can be filed only by the person who is a resident of India. Form 67 is for claiming the relief under the income tax law, and that particular form is supposed to be filed only by the resident of India. If at all that particular person is becoming the non-resident, then that particular person is supposed to file Form 10F, because that particular person per se cannot file Form 67. And for avoiding the double tax of the income which is already taxed in Germany, per se, that particular double taxation should be avoided, and therefore that particular person should file Form 10F and not Form 67 in that particular case. Otherwise, if at all you are wrongly treating that particular person as resident, if at all you are filing Form 67, and if at all there is a case under the scrutiny, your return of income itself will become null and void, because filing of Form 67 per se for non-resident itself is not applicable. Thirdly, the claiming of relief will itself be wrong. Fourthly, you please check the correspondence of that particular person with the company, what type of declaration that particular person is giving to the employers. That is, whether he is particular giving the reason of his employment and whatnot, or what is the purpose for which he is being in India. Because under Section 6(1)(a), read with Section 6, Clause 1, you are required to understand the distinguishing factor between the person or an assessee when he is leaving India for the first time and the person after he has left India, whether he is visiting India. So Section 6(1)(a) really talks about person who is visiting India after he has left the employment in the earlier years. Therefore, you are required to check all the provisions of the law. I will once again recollect, and I will once again invite your attention to the fact that don't file the return merely on the basis of the fact as to whether a particular person's 26 age is correct, whether that particular bank accounts are correct, whether the Form 16 salary and the salary is matched, whether the relief given is correct or not, whether Form 67 is validated or not, because we are so busy with the filing of the returns of income that it is not really possible for any chartered accountant or tax consultant, because of the pressure of time, to really check the residential status of the assessee. And the checking of the residential status of the assessee is really an important issue, because we are aware that in the case of resident of India, the global income is taxable, wherein in the case of the RNOR, the disclosure of the foreign asset is also not required. And in the case of non-resident also, disclosure of foreign asset is also not required. Lastly, a person who is resident of India can take the credit of foreign relief by filing Form 67. For a person who is non-resident, he is supposed to file Form 10F. And therefore, please note that filing of the residential status correctly, or filling of the residential status correctly in the return of income is absolutely important, or important as a first step per se, before we really per se start with the process of computing the income and offering that particular income to tax. And therefore, this particular case study is really a googly, or this particular case study is really case study of a negligence. Or whenever we tax consultants are leaving the calculation of the residential status to our juniors, we feel that calculation of residential status is not my task, it's a task of my juniors or task of my article students. And we per se ignore the law in the first instance itself. And therefore, the total return of income will go haywire, and therefore it will really make a bad return of income in the eyes of the law. And therefore, all the tax provisions of the ill effects of the income tax law shall fall on the assessee. So this is my third case as regards residential status of the assessee. Let us understand the case studies wherein we are required to really understand as to how the concept of decisions which are required to be made before understanding the facets of a particular law with reference to the position of the law. And therefore, let us stop this particular discussion under the gamut of any particular entity. And therefore, let us understand a particular case study based on the case study of the deciding factors of the celebrated our routine matters, that is the matters of the Central Board of Direct Taxes, while defining the capital gains character and nature. Why it is always important to understand the nature and the character of capital gains under the law, rather than merely checking 26As, AIS and TIS, is that, first of all, we really don't get time, or there is a pressure of time, or really per se, SSC gives us the data so late that we are not in a position to apply our mind. The first mistake which is happening is not clearly identifying the bonus shares which are sold by the broker. Secondly, the mistake of non-identifying a particular sale or purchase transaction as attributable to the particular PMS account or to a particular demat account. Well, under the income tax law, you are required to calculate the capital gains with reference to the each demat account. Each circular of the demat account or each demat account is required to be considered separately. You can ultimately club the short-term provisions of taxation. You can ultimately club the long-term provisions of the taxation. Long-term, short-term, you can combine together. You can segregate the total provisions or the total income of the capital gains between various categories such as share trading income. Please note, share trading income shall get taxed under that income from business profession and not under the capital gains. Therefore, the first mistake is of bonus. Second mistake is of the type of demat account. Third mistake is the type of the return of income. Fourth mistake is the not understanding the frequency of the particular SSC and the gamut or the volume in which that particular SSC is undertaking the transactions. Fifth, the age of the age of the SSC. Sixth is the non-availability of the broker's account or non-availability of the account of the borrower or the person in the books of the broker. Next mistake is non-verification of contract notes by the tax consultant. The fifth mistake is not identification of the shares which are rights in the nature. So shares which are rights shares, for that particular thing, there is a different cost of acquisition calculation mechanism. The next mistake which is happening is the mistake of giving the grandfathering effect or not giving the grandfathering effect. And last but not the sole mistake is relying totally on the data which is given by the broker without correlating that with the AIS and TIS with the contract notes. Just like accrual of income, in this particular case, the SSCs are required to understand that various factors such as date, then the nature, then the type of the share, that is bonus, right, amalgamation, merger, demerger, etc. Then linkage of that particular contract note with the AIS and TIS record. Next is the grandfathering effect before 31st of Jan, after 31st of Jan 2018, so on and so forth. Therefore, your attention is invited to three important circulars of the tax department, wherein we are required to prepare basis of the working of the filing of income tax returns of income in our office. We are required to take signature of the SSC rather than merely relying on the records which are given by him. The first circular is circular number 4/2007, dated 15th of June 2007. Second circular is the circular number 6/2016, dated 29th of February 2016. Then another circular which are there, which I will come into the play later on. Why these cases or why these circulars are important? Because you are required to prepare a working note as to whether the intention of the SSC is good enough to decide as to whether a particular income is to be taxed under that capital gains or whether that particular income is required to be taxed under that income from business profession. Secondly, whether the separate portfolio are required to be understood and analyzed by us before filing of the return of income. Therefore, the calculations are required to be made based on the portfolios or based on the PMS accounts rather than merely the AIS and TIS, because AIS and TIS may not necessarily give you the strot, that is the source or the ugam from which those transactions are emerged. because there are certain high net worth individuals who are carrying out the transactions on their own. Also, their 2 to 3 PMS holders are also carrying out their transactions on their own. Everyone is dealing in Infosys, everyone is dealing in Maruti, everyone is dealing in Bajaj Finance, and wherein non-linkage of that particular transaction with a particular PMS shall be detrimental in your interest. Next is whether the books entries are conclusive. Answer is no. Books of account entries are relevant, but they are not conclusive, because income tax department is of the opinion that the tests like intention, source of income, type of the transactions, volume of the transactions, the capacity of the borrower to fund that particular investments as a transaction, treating the SSE, the particular commodity or the particular share as the investment or the stock. Last but not the least, whether that particular shares, those particular shares are really acquired by the SSE as a result of transfer or as a result of transmission. Please note, transmission is by virtue of law, wherein you are getting that particular shares transferred in your account as a result of death or some unfortunate event or by way of will, etc. So these cases are very, very important. Nextly, whether the intention at the time of acquisition is decided. So intention at the time of acquisition and intention at the time of sale are per se two different aspects. Next, frequency of the transactions. Next, magnitude and sustainability of that particular transactions. Last but not the least, the holding period of that particular transaction. Sourcing of the funds, whether the transactions are being funded by the SSE by his own funds or by the borrowed funds. Your attention is invited that there were case laws under the Bombay High Court. One of the famous case laws which I just recollected while delivering this lecture is of Marialwala, wherein the tax department has allowed interest on borrowed capital from the capital gains also, or the income tax department has allowed that interest is to be considered as a cost of an asset while calculating the income under that income from capital gains. Therefore, your attention is invited to the fact, first, list down all these transactions. Secondly, list down all the parameters. Tick it with yes, no parameter. Thirdly, decide as to whether a particular transaction is a capital gains or business profession. Fourthly, decide the form in which you are going to be filing the return of income. Fifthly, understand the source from which the transactions are really emanating. Seventh, understand and logically link all such transactions with the contract notes. Next is consistency over earlier years as to how you are trying to figure out that particular aspect. And another main contentions of the SSE, such as income from other sources or house property and whatnot. And therefore, all such factors will decide as to whether a particular transaction is a transaction of a capital gains or a transaction under that income from business profession. And therefore, the last circular, wherein the circular number 6/2016 is also required to be given. Another aspect, which is very, very important aspect, which we discussed in the earlier version, as to what is the residential status of the SSE and as to how he is carrying out the transactions. Whether he is carrying out the transactions on his own or whether he is carrying out transactions via broker. How the decisions are being taken. Whether the decisions are being taken by himself or whether the decisions are being taken by the portfolio managers based on the power of attorney given by the SSE to those such people. These cases are very much important from the perspective. Last but not the least, which is the last resort or which is the last sword in the hands of the income tax department. And that sword is nothing but genuineness. Once SSE offers an income to tax, income tax department is happy. What income tax department will check? Whether that particular income is reported in the correct hands, and secondly, whether that particular income is reported correctly as a mathematical calculation, and secondly, whether the head of the income is correct or not. Why? Because basic concealment of income itself is not there. SSA has offered the income to tax on his own. So what remains? What remains is once the income tax department has identified that the correct income is offered to tax, they will try to check the genuineness of the SSE as to whether the genuineness is followed. And therefore, once the source is established, second parameter of the genuineness will start getting established by this particular aspect. And therefore, these all circulars are absolutely crucial from the perspective of the filing of the returns of the income. Our next case study is the case study wherein you are really required to understand the provisions of Section 9 vis-a-vis Section 6 of the Income Tax Act. There are cases as to where assessees are making payments as a subscription towards various artificial intelligence tools such as ChatGPT or say Perplexity or Claude. That particular person is an artificial legal entity to whom provisions of deduction and payment of TDS is applicable, or to whom provisions of Section 44AB are applicable in the previous year. That means previous year means the earlier previous year. In that particular case, the individual is liable to deduct the tax at source from the subsequent assessment year. Now, if that particular company or if whether that particular individual has subscribed to say Claude or to say Perplexity or to say ChatGPT by making a payment in the dollar by way of a credit card, which is in the name of the company, or whether that particular company's individual is making the payment and getting his reimbursed, or whether that particular individual is on his own liable to be taxed under the head income from business profession, and by the virtue of which Section 44AB is also applicable to that particular person. Now, real question before us is that as to whether a subscription made to the artificial intelligence tool, which is usually made by the credit card, whether it is liable for deduction of TDS under Section 195 of the Income Tax Act, read with various other provisions of TDS of the Income Tax Act or not. Why? Because whether we are making a payment to a non-resident at that particular point of time, it is not really possible that the deduction and the sources or the Form 10F, the residential status, the form of the tax residency certificate or other documents which are really understood, or the tax identification number TIN are not really available in the hands of an assessee or in the hands of a tax consultant before we are filing the returns of income. We merely debit that particular expense to subscription account or membership account or to office expenses account and pass the entry in the books of account without really understanding as to the fact as to whether a deduction of TDS is really applicable or not in the eyes of the law. Next is that, therefore, Section 9 of the Income Tax Act, which deals about income deemed to accrue or arise in India, Section 9 into bracket 1 into 7, that is taxability of service in India and deduction of TDS. In this particular case, we are really required to understand as to whether a particular transaction is really liable for deduction of TDS or not. So what are the parameters which are required to be considered while filing the return of income, or which are really required to consider as to the deduction of tax at source in the cases not only for the subscription of the AI tools, but that is also applicable when a particular person is using the services of Amazon or services of a software or services of any such technical platform which is available in India by making the payment in dollar terms. As to whether the question arises as to really whether a particular expense is really liable for deduction of TDS under the Income Tax Act or not, and the relevant section is Section 195 of the Income Tax Act. Nowadays, the section has been changed to Section 393 of the Income Tax Act 2025. Why? Because if at all the TDS is not deducted, the provisions or the fallouts of non-deduction of TDS will be applicable. Number 2, interest will be applicable. Number 3, penalties or the fees will be applicable. And 4th and 5th, very, very important is that that particular expenditure will be facing a disallowance. Last but not the least, that particular expenses will not be reported wrongly under the Form 3CD, that particular expenditure is disallowed under the Income Tax Act. Therefore, I have decided to take up this particular aspect in such a way that which is really closer to your hearts. And therefore, I have tried to decide the cases or tried to comment upon the cases which are really relevant in our life. Therefore, I have tried to select the cases such as HUF, number 2, capital gains, number 3, residential status, Number fourth, agriculture land. Number fifth, the various circulars under the capital gains. Last but not the least, this particular case study, that is the case study of payment of subscription for an AI tool or availing a service by way of a platform or by way of some Amazon or by way of some kind of platform under the law. Now let us understand as to how provisions of section 917 are really flowing and what are the parameters which are really considered for determining these particular cases. Number one, the cross-border cases. In the first case, let us understand that employee of say Wipro has met with an accident in USA, and Wipro company has made a payment to the hospital in USA. Whether TDS is liable to be deducted by Wipro or not? Answer is obviously no, because per se service is not availed by the Indian company in India. Service is not consumed in India. Service is not made available in India. Last but not the least, there is no per se any human intervention over here as well. Therefore, whenever a particular employee of a particular company or an assessee who has met with an accident and who is taking a treatment in the hospital outside India, whether that particular payment is liable for TDS, answer is no. So this is the first and foremost important case studies, first sub case study, as we are trying to decide as to whether a TDS deduction is required to be not under section 195 of the Income Tax Act or in the subsequent years in the Income Tax Act 2025 under section 393 of the Income Tax Act. The second case study, certification of material is organized by an Indian company or an Indian assessee. Assume that a partnership firm or LLP or an individual who is importing material in India, what he's trying to do, he's trying to make the payment to the agency who is inspecting the material outside India. So that particular material inspection charges are paid by the assessee outside India. That particular material is then getting imported in India. That particular cost is being booked in India as the expenses of repairs maintenance or expenses as inspection fees or expenses as professional fees. The issue arises under section 917 of the Income Tax Law as to whether that particular expenditure is liable for tax or liable for deduction under the Income Tax Act under section 195 or not. Here also the answer is no, because per se service is not made available in India, service was not rendered in India, service was not having any kind of human intervention in India, and service although was made available for the material which was acquired in India, that particular service was consumed out of India. And therefore, in the second sub case also, the deduction of TDS does not arise. Let us understand third case. Whenever a particular material or whenever a site in a particular site, the labor is employed for loading and unloading of the particular material for the purpose of making the shipment outside India or for the purpose of making shipment in India or for the purpose of loading a cargo in the case of travel of goods by air. In that particular case, let us understand that the labor payment or the labor which are employed by the particular person out of India, although the material is subsequently imported in India, once again the human intervention is out of India. Number two, there is no per se service availed in India. Number three, the service is not consumed in India. And last but not the least, that the know-how is not really made available in India. And therefore, in that particular aspect, the particular TDS is not really required to be deducted. Let us understand the case of elevated service versus rudimentary service. Whenever a particular platform is made available, like Amazon, or whenever a particular person in India is subscribing to the software or subscribing to the license fees or subscribing for the AI tool, in that particular case, the courts have held that that particular service is in the nature of nostria solis and ejudem generis in nature, which are per se Egyptian or the European pronunciations which are imported under the law of land. and which are really important to check as to whether a particular service is liable for tax in India or not. So in section 917, there are three important words which are given. Number one, technical service. Number two, managerial service. And number three, consultancy service. The word managerial service is sandwiched between the words technical service and a managerial service. And therefore, courts under the various ratios such as Bharati, Airtel, etc., they have given the decision in the favor of the assessee by relying on the principle of nostorius es solis, that particular expenditure, although it is in the nature of availing of the service in India, whether that particular assessee is really availing the service in India, whether that particular person is really consuming the service in India, still the elements of human intervention and still the elements of making that particular service available in India. For example, as to how this particular service is really distinguished between the service consumed in India, which is service which is made available in India, you can understand with the reference of an example. Assume that Cummins India Limited in USA is rendering a service to Cummins India in Indian counterpart. In that particular case, Cummins India in the Indian country is getting the service from Cummins USA by ensuring that the know-how which is made available by Cummins USA to Cummins India. So in that particular case, there is human intervention, the test is satisfied. The test of making it available in India is also satisfied. Number three, the concept of nosture es solis versus adjudicatum generis is also satisfied, that the word consultancy is being, or the word managerial and the word technical are required to be complied in totality with each other, because these three words per se cannot be separated, and therefore whenever Cummins India Limited is getting a service from Cummins USA, that particular service is liable to be taxed in India under section 195 of the income tax law. However, a contribution which is made by the Indian people, or the contribution which is made by the partnership firm or the LLP or an individual for subscription to AI tool is not taxable in India for want of absence of human element or in the nature of absence of making it available in India. Therefore, for this particular case, you are required to understand the principles of DTA and the principles of income tax law. In the case of Azadi Bachao Andolan, Honorable Supreme Court has decided that whenever there is a conflict between the double tax, Indian tax law and the DTA, the provision which is more beneficial is required to be tested. Therefore, section 917 is required to be understood from the parameters of various such aspects which were just discussed by me, as to whether a particular case is really a cross-border case, whether a particular service is really consumed in India, or whether a particular service is consumed out of India, whether a particular certification work or whether the particular inspection is done in India or outside India, whether the labor operations are really performed in India or outside India, whether the principle of rudimentary service or the routine service. Why? Because subscription to Amazon, subscription to foreign companies' platforms are availing their service, or subscription to AI tools is nothing but a rudimentary service. That means a rudimentary means a routine service. In that particular case, per se, although the service is availed by the person in India who is a resident of India, to whom provisions of section 195 are applicable, so to say, still in that particular case, the deduction under section 195 is not applicable, and therefore once again you are required to make a documentation before filing the return of income or before finalizing a tax audit report as to whether a particular expenditure, why it is not required to be deducted under the tax at source under various provisions of the law, and therefore that particular documentation will make you sure that the communication of yourself between the assessee and the tax department, in case the case is selected for scrutiny, or whenever you are examining the evidence under Form 3CD, wherein the assessee is supposed to prepare Form 3CD, are much more relevant and not. And therefore, whenever there is a conflict between the DTA and the income tax law, the provision which is more beneficial to the Indian SSE shall always be taken into consideration. Now, my last point of this particular case study is with reference to the clauses of making it available in India. The double tax avoidance agreements of India, USA, India, UK, India, Singapore are definitely having the presence of the word make available. However, DTA between India and Germany, DTA between India and Austria, these treaties are not having the clauses of making it available. Therefore, it may be difficult for you to check whether the particular service is really available in India, consumed in India, made available in India, or whether there is human intervention. If there is no per se clause in DTA as to how a particular professional will understand as to whether a particular expense is liable to be deducted under section 195 or not. And therefore, please note that the requisite documents are in front of you. And these all cases are supposed to be getting highlighted. My last topic of today's session, which will get concluded in next 5 minutes, because I was just going through the agenda that you have kept around 15 minutes for the question answer session. And therefore, whenever a particular session is being delivered on online platform or non-physical mode, really per se, there may be a problem of getting connected with each other. Therefore, I have decided that I will just speak for this particular aspect over the next 5 minutes and give you an opportunity to talk more or give you an opportunity to ask me more questions just to ensure that the session will really become productive. I would like to invite your attention to the fact that just 4 days back, Income Tax Department has notified ultimately the foreign asset disclosure scheme, which was really announced in the last budget. So wherever SSE has not complied with the law, that is a non-disclosure of the assets, foreign assets, or non-reporting of the foreign assets, please note these two aspects are different. Non-disclosure is different, non-reporting is different. And the third case is non-reporting of the income to the tax. So in all these 3 cases, Income Tax Department has set out, it has notified the particular scheme, and it is supposed to be getting addressed by we professionals as tax practitioners by virtue of filing initially Form 1. After filing Form 1, the tax department will evaluate, then they will issue Form 2, then we'll make the payment in Form 3, then we'll submit it, and in Form 4, whenever it is filed, ultimately the case shall get closed. This particular scheme is nothing but an amnesty scheme. The most beautiful part of is that wherein earlier we tax consultants were feeling that the penalty of rupees 1 lakh will be for 1 lakh for each year. However, it is not so. It is 1 lakh for the entire period of default. And therefore, really, it is a beneficial provision. I'll request you to take the benefit of that particular notification, wherein there is no disclosure, where there is short disclosure, where there is no reporting of income, or where there is no reporting of any source. Per se, foreign asset means the ESOPs or the RSU or the other stocks, which are per se offered by the SEC in his return of income. Therefore, this is the case, nothing but the case of the non-reporting by the SEC in foreign asset tax schedule, because as it is, the ESOPs are taxed in India, and there is no per se concealment of any source in India. Now, what are the areas wherein there is no per se non-disclosure? The first is immovable property, which is acquired out of India. That is, whenever a person is acquiring a property in say Switzerland or in say Dubai or say in UAE or say Qatar, and that particular person is not disclosing under foreign asset schedule. That is the second example or the third example. Third example or the fourth example is the insurance policy. If at all SSA is availing insurance policy out of India, and that particular insurance policy is not reported, that is also an asset. Fifth is a right to operate a particular bank account or a right to have a joint property. That also will become a property of the SSE in foreign assets. I have recently come across an interesting case study wherein a particular director of the company had flew to foreign country, and in that particular case, his foreign account was supported as a joint holder by his wife. And in that particular case, a question arises as to whether that particular wife is also supposed to disclose the foreign asset or not. And answer is fortunately or unfortunately, I don't know. Answer is yes. Even if that particular wife has got nothing to do with the account of her husband in foreign country. But since she is the second holder, that particular wife is also supposed to disclose that particular asset. And therefore, if at all that particular assessee has not disclosed that particular bank account in her income or his income, your attention is invited to the fact that that particular asset is reported by you. Next type of asset, which is a foreign asset, is nothing but motor car. Your particular assessee is a person who has acquired a motor car in the foreign country. And if at all that particular person has not reported that particular asset in the foreign country, that will also come into the play. And therefore, this particular circular is required to be understood in this particular context. And therefore, take the benefit of this particular circular, wherein the last date of filing of the application is 31st of December 2026. And it has already started. The procedure has already started. Perhaps after the filing of the returns of 31st August, many tax consultants will switch over to understand this particular aspect. Therefore, once again, my last point of this particular session in last 5 minutes is with reference to the taxability of betterment of charges, taxability of rental income when the property is under redevelopment. There are plethora of case laws wherein it has been stated that whenever a particular person is relocated as a fact of redevelopment, in that particular case, if the builder is paying, so to say, rent or license fees, in the language of the courts, it is called as hardship fees. It is not per se rental income. It is not per se license fee. However, it is called as hardship fee. Therefore, hardship fee is not at all taxable. And therefore, that particular hardship fee is supposed to be getting reported under other income. Already, it is capital receipt in nature because per se it is not taxable. Now, there is an alternative view that if at all a builder is paying, say, that particular hardship money of say 40,000 per month, and if at all assessee is only consuming 25,000 rupees out of it, whether the differential proportion of 15,000 is taxable or not. According to me, that particular 15,000 portion is taxable. However, courts have taken an extended view that that particular 15,000, even if it is not consumed, even if it is enjoyed by the assessee, still it is not taxable because it's capital receipt. I would like to invite your attention that these decisions are yet the decisions of the High Courts or the Supreme or the tribunals. The matter is yet to reach the Supreme Court. And therefore, I'm of the opinion that let us put the ball in the court of the assessee, let the assessee decide as to whether the difference of the 15,000 is in the nature of income or not. If at all he is ready to take the risk, don't offer that particular income to tax. Fight it out by checking the cost benefit analysis of filing the appeal vis-a-vis saving of the tax as the case may be. However, disclose these facts very, very well. I would like to further advise you to also send a covering letter to the tax department after filing the return of income as to why you are treated this particular income as capital receipt and not as in the nature of income. Secondly, the betterment charges are also a case of capital receipt and therefore they are also not taxable in the land of law, and therefore that is also capital receipt, it is not taxable. And therefore all these receipts, so to say, are taxable as the capital gains under section 45(5)(a) of the Income Tax Act when that particular person will receive the particular flat as a result of occupancy certificate. Even if one particular company, as a case of redevelopment, even if one person will get the occupancy certificate, at that point of time, in that year only, your per se taxability applicable will be applicable. And therefore, it is advised that if the TDS is deducted under section 194 IC of the Income Tax Act, it is better to postpone the particular TDS to the subsequent assessment year when the particular income will be given a chance or a color of a capital gain rather than an income itself, because income and taxability should go hand in hand. And therefore, your attention is invited to the fact that that particular income is given a color of capital gains and that particular income is taxable as capital gains in the year in which occupancy certificate is being received by you. So with these particular cases, I wish to really conclude my session. Well, I once again give thanks to the MTPA, their body, for giving me this opportunity, for giving my views also. Because of this, I could open the Income Tax Act once again. I could share my thoughts. I could once again read the provisions of law much more carefully. I am of the opinion and I am of the view that more and more knowledge you share, more and more knowledge will come back to you. And therefore, thank you very much for your patient listening. Thank you. Now, I would like to have the questions, if any, from the audience. There are no questions in the chat box. However, if at all any person wish to ask any question on the physical mode, that is also welcome. Because per se, I should give the opportunity of you guys to demonstrate your own view also. Because this is a democracy and any person can. Vishara.
Sir, I have a question. जसं आपण पहिले स्टार्टिंग मध्ये बोलले की if a person having the particular institute as a professional body, in one of my case, if some investors are coming together and they form a hospital services like medical, and they are appointing some doctor as a professional consultant, then in that case, how we should treat that?
That particular entity, whatever you are talking about,
Yes.
must be an entity of a public charitable trust, or it can be Section 8 company, or it can be a private limited company. Okay. So assuming that that particular entity is having three types of entity types or the legal status, am I right?
Okay.
Any doctor, whatever you are appointing, that particular doctor is appointed either as an individual or you can appoint as a partnership firm of the doctors. However, you cannot appoint HUF as a doctor. That is my submission. That was my case.
In that case, we can.
Because HUF per se cannot render a service of a doctor, or HUF per se cannot render a service of a CA. Yeah. आजकाल काय झाले, लोक इंटरनेटवर बघतात आणि म्हणतात की आम्ही नेटवर बघितलं आणि आम्हाला असं कळलं, गुगलने सांगितलं की डॉक्टरांना HUF फॉर्म करता येते. डॉक्टरांना HUF फॉर्म करता येत नाही. HUF ही लग्नानंतर तुमच्या अस्तित्वात येतेच, त्याला तुम्ही शेप देता. याचा अर्थ तुम्ही HUF नी डॉक्टरची सर्व्हिस द्यायची नाही. HUF डॉक्टरची सर्व्हिस देऊ शकत नाही. सो त्यांना जे ऑथॉरिटीने रजिस्ट्रेशन दिलं, त्यांचा TDS कापला, म्हणजे ती सर्व्हिस HUF ने दिली असा अर्थ होत नाही, ती सर्व्हिस इंडिव्हिज्युअलनेच दिली. एनी अदर क्वेश्चन?
एक टूर्स अँड ट्रॅव्हलचा बिझनेस आहे त्यांचा, तर त्यांनी यांना समजा नर्सरीचे काही नर्सरीचे प्लॅन्स घेतले आणि ते सेल केले, म्हणजे ट्रेडिंग केलं, तर ते ऍग्रिकल्चर इन्कम करता येईल का नाही?
Per se, yes. In the benefit of law, yes, because agricultural implants or agricultural plantation is being defined under the law. To based of my recollection of memory, since I have been reading and listening to all the budgets since 1990 when I was a student of CA, I definitely recollect that this particular amendment was made by the P. Chidambaram in the budget. That he has stated that implants किंवा प्लांट्स मध्ये डीलिंग तुम्ही जरी केलं तर ते इन्कम ऍग्रिकल्चर इन्कम होऊ शकतं, किंवा ते इन्कम जे आहे ते प्लांटेशन इन्कम होऊ शकतं. आणि तुम्ही त्या इन्कमचं तुम्हाला प्रूव्ह असं करायला लागेल की कुंड्या कशा आणल्या, कुंड्या कुठे प्लॅन केल्या, तिथे सीडिंग कसं केलं, फवारणी रोपणी कशी केली, विक्रेते कोण होते, खरेदीदार कोण होते, त्यांचं इंटेन्शन काय होतं. म्हणजे ट्रॅव्हल कंपनीच्या नावाखालती ते ट्रेडिंग करत होते प्लांटचं, का बरोबर त्यांना प्लांटेशनचं ट्रेडिंग करायचं होतं. प्लांटेशनचा खर्च किती, त्याचं उत्पन्न किती, त्याला रिसोर्सेस लागतात, त्यातले कॉमन रिसोर्सेस किती. मग जर का ऍग्रिकल्चरल प्लांटेशन ऍक्टिव्हिटी लॉस मध्ये असेल आणि जर का ते ऍग्रिकल्चर इन्कम ब्लॅकच्या व्हाईटच्या दरवाजाने आणत असतील आत इन्कम, जे ट्रॅव्हल कंपनीमधून मिळालेलं ब्लॅक इन्कम प्लांटेशनच्या नावाखाली व्हाईट करत असतील, असं असेल तर ते तुम्ही चेक करा. अदरवाईज तुम्ही सांगताय त्या बेसिसवर आन्सर आहे का, येस, ते करू शकतात का, येस, लिगल आहे का, येस. पण बाकीचे जे पॅरामीटर्स ऍग्रिकल्चरल इन्कमचे किंवा ऑपरेशनचे आहेत ते तुम्हाला त्याच्यामध्ये त्याचं डॉक्युमेंटेशन करायला लागेल. क्लायंटकडून रिप्रेझेंटेशन घ्या, त्याला त्यातल्या रिस्क सांगा आणि मगच पुढे जा. अदरवाईज म्हणतील आम्ही रिटर्न फाईलच नाही केलं, ते त्यांनीच फाईल केलं, त्यांच्याच IP ऍड्रेसवरून रिटर्न फाईल झालं आणि त्यांनीच तर आम्हाला सांगितलं की असं करा. कृपा करून याच्यात जाऊ नका. पण अदरवाईज येस, आय विल नॉट अपोज अ क्वेरी फॉर अ instrument which is legally valid. Okay, Sharma sir. Okay, okay. Now, since the queries are over, I wish to say that full stop from my end. Thank you very much once again. Nice work.
Thank you, sir. Thank you for the such knowledgeable and insightful session. It will really help our members for their filing session. Thank you very much. After this session, it will followed by the secretarial announcement. Right. sir, please.
नमस्कार. महाराष्ट्र टॅक्स प्रॅक्टिस असोसिएशन आपल्या सभासदांसाठी नेहमीच निरनिराळे कार्यक्रम आयोजित करत असते. यावर्षी मागच्या वर्षीप्रमाणे यावर्षी सुद्धा आपला गोल्डन एज पास हा जो उपक्रम आहे हा चालू ठेवलेला आहे. या उपक्रमामध्ये आपण 14 स्टडी सर्कल मीटिंग्स, GST लिटिगेशन कोर्स, इन्कम टॅक्स लिटिगेशन कोर्स, त्याचबरोबर 2 फुल डे सेमिनार, इन्कम टॅक्स रिफ्रेशर कोर्स, GST रिफ्रेशर कोर्स असे निरनिराळे कोर्स आयोजित करणार आहे. साधारणपणे या वर्षामध्ये त्यासाठी आपण फक्त 6,900 हे माफक शुल्क ठेवलेलं आहे. तर मी सर्व सभासदांना विनंती करतो की त्यांनी लवकरात लवकर याचा लाभ घ्यावा आणि मेंबरशिपचे पेमेंट करावं. त्याशिवाय स्टडी सर्कल मीटिंग आणि सेमिनार हे सुद्धा आपण अरेंज करत असतो. आपल्या ही जी माहिती आहे आपल्या इन्कम टॅक्स, ओनली टॅक्स ग्रुप, सोशल ग्रुप आणि सर्व मेंबरचे ग्रुप यांना आपण देत असतो. तर त्यांनी त्याचा फायदा घ्यावा. धन्यवाद.
थँक्यू सर. आता जसं सरांनी बोलले की ती स्कीम खरोखर खूप चांगली आहे. प्रत्येकाने त्याचा लाभ घ्यावा जेणेकरून तुम्हाला वर्षभरात एक चांगला एज्युकेशनल बॅकग्राऊंड भेटेल. त्यासाठी सर्वांनी त्याची पूर्णपणे पूर्तता करणं हे तुमच्यासाठी पण चांगलं आहे आणि एक नॉलेज गेनिंग सेशन्स कंटिन्यू होत असतात. फायनली आय रिक्वेस्ट ॲडव्होकेट प्रणव शेठ सर टू प्रपोज द वोट ऑफ थँक्स.
Respected President of our esteemed association, Advocate Naneshwar Narole sir, our esteemed speaker, Sri Shekhar Sane sir, Chairman of the Study Circle Committee, Shri Milind Hendre sir, Member of Study Circle Committee, distinguished members of MTPA and dear professional friends. A very good evening to everyone. It is my privilege on behalf of MTPA to propose the vote of thanks for today's second Study Circle meeting on a very relevant topic of income tax return filing AY 2026-27. At the outset, I sincerely thank C.A. Shekhar Sane sir for taking the time to be with us and for sharing his valuable knowledge, practical insight, and experience on such an important subject. I am sure that guidance received today will help all of us in our professional practice, particularly during the upcoming return filing season. I am also thankful to the entire team of MTPA for their valuable support behind the scenes. A heartfelt thanks thank you to all participants who have taken time from their busy professional schedule to be a part of this learning initiative. Your participation and enthusiasm are what make this study circle meeting truly meaningful. As a professional, continuous learning is not merely an option. It is the foundation of excellence. I hope today's session has added value to each one of us and will translate into better, more confident professional service to our clients. Once again, on behalf of MTPA, I extend my sincere gratitude to C.A. Shekhar Sane sir, Team MTPA, and every participant to make today's session success. Thank you so much.